morning, ladies and gentlemen. Welcome to today's webinar. My name is Hassan Sabir and I'm the Finance and ESG Director at EPRA. Today's webinar is presented in partnership with KPMG, whom have been instrumental in producing the guidelines, EU Taxonomy Alignment and Listed Real Estate, but also this webinar. Together, we will discuss the guidelines on how to implement the regulation 2020/852, known as the EU Taxonomy. We will cover a set of questions following extensive engagement with EPRA's membership, such as, how do I report on the eligibility of activities? How do I report the alignment of activities? How can I define the top 15% building stock? Which methodology to use for reporting of turnover, CapEx, and OpEx percentages? Jana Bauer, ESG Policy and Advocacy Manager at EPRA, will be starting off with an introduction to policy developments. Subsequent to this, Raluca Karp-Hengi, Managing Director at KPMG Luxembourg, will be elaborating on the EU Taxonomy, including how to use the published guidelines and related work example. Please note, the EU alignment and listed real estate guidelines are not an opinion or interpretation of EU Regulation 2020/852, but a guidebook to support EPRA members during the implementation stage. Before embarking on the implementation of the EU Taxonomy, we strongly encourage you to confirm with your external auditor, local regulations, and your business model. As a reminder, the webinar is recorded, and you have the option to submit questions via the Zoom question and answers window during the whole session. Without further delay, I now invite Jana to kick off the webinar, starting from the latest taxonomy-related policy update. Thank you.
Thank you, Hassan. Good morning to all. I will begin today's presentation by explaining briefly the context of the EU taxonomy. Then I will move to the latest policy developments. In particular, I will talk about environmental taxonomy, minimum safeguards, social taxonomy, and possible review of the overall existing framework. Before we go there, let me quickly explain why the policymakers developed the taxonomy. In 2015, 192 countries plus the European Union have joined the Paris Agreement. This agreement includes commitments from all countries to reduce their emissions and work together to limit global warming to 1.5 degrees. Such a commitment forced the policymakers to think of ways how to steer the flow of public, but most importantly, private capital towards sustainable investments. As a result, the high-level expert group at the European level was formed to provide advice to the European Commission on how to identify and deploy relevant policies on a pan-European scale. Understanding the structure of the capital markets, high-level expert group advised on policies which would impact each of the financial market participants and relevant stakeholder, whether it's an investor, financial advisor, benchmark provider, or a non-financial company such as listed property company. Their vision was to look at how to develop joint efforts to achieve sustainable economic growth. Based on their recommendations, the European Commission published an action plan for financing sustainable growth. Such a plan counted for establishing a clear and detailed EU taxonomy. This is a classification system for sustainable activities, and it has become its centerpiece. It means that all other initiatives, whether already in place or will be in place later on, will connect to the European taxonomy. It is, for example, the case of SFDR's Article 9. It is also the case of European green bonds, for example. While the policy process of the taxonomy's establishment began almost 6 years ago, even today, the taxonomy is not complete yet. Currently, we have the climate taxonomy, which you can see in the center of the slide, with 2 environmental objectives. We have specific disclosure requirements, minimum safeguards embedded in the underlying regulation, and new addition to the taxonomy on nuclear energy and gas on the left side. The climate taxonomy and disclosure requirements are carefully elaborated in the EPRA guidelines and will be discussed later today by Sandy and Raluca. I will now focus on what's yet possibly coming, either legislatively or otherwise, and I will start with the environmental taxonomy. We know that there are 6 environmental objectives in total. 2 of them are covered by the climate taxonomy: climate change mitigation and climate change adaptation. The remaining 4 environmental objectives will be covered by the upcoming delegated regulation, which we can simply call environmental taxonomy. Circular economy is the most relevant environmental objective for real estate. In March this year, the Platform on Sustainable Finance, or simply the Platform, published its recommendations to the Commission on technical screening criteria for the remaining 4 environmental objectives on the taxonomy regulation. This platform serves as a technical advisor to the European Commission regarding all sustainable finance related policies. What's important to note is that certain economic activities which are eligible under the current EU climate taxonomy do not seem to be equally eligible under those recommendations of the platform for the environmental taxonomy. Acquisition and ownership category is one of them. The report, however, is not binding for the Commission, and the Commission is yet to publish its draft delegated act. We expect this to happen still this year. And as part of the Commission's better regulation agenda, stakeholders such as EPRA can provide feedback on the draft delegated act during a 4-week period. This also we expect to happen still this year. Once the Commission has adopted the act, Parliament and the Council generally have 2 to 4 months to formulate any objections. And if they don't object, then the delegated act enter into force. On this slide, we can see a little bit in more details on what the platform is actually proposing. There are currently 2 economic activities related to real estate: construction of new buildings intended for sale and renovation of existing buildings. They both have specific technical screening criteria for only one of the 4 remaining environmental objectives, which is, as I mentioned before, transition to a circular economy. Renovation of existing buildings has more or less the same criteria as construction of new building, with a few additional conditions. For example, that at least 50% of original building is retained. I will not go through all the details today. Please note that we will circulate the slides after the webinar to all attendees. And if you want more information, you can always reach out to us. I will move now to the minimum safeguards, and you will hear more about this part from Raluca later today. But just to give you a context, the taxonomy regulation sets out specific criteria which need to be met in order for an eligible economic activity to be considered as environmentally sustainable economic activity. Such activity has to meet technical screening criteria on substantial contribution to one of the 6 environmental objectives. They need to also do no significant harm for any other of the remaining environmental objectives. And at the same time, they need to meet the criteria of minimum safeguards, which are briefly listed in the taxonomy regulation. The current platform on sustainable finance has a mandate to advise the European Commission on the functioning of such minimum safeguards, which are embedded in the taxonomy regulation, and it's Article 18. And only 2 days ago, the platform actually published its final report on minimum safeguards, and it published this report together with another report on data and usability of the taxonomy. Neither of these recommendations are bound by the European Commission, and their intention, as they announce, is not to legislate further for minimum safeguards throughout this Commission's mandate, so until May 2024, but instead support the stakeholders in application of the taxonomy and review the usability of the taxonomy reports and provide additional guidance for the stakeholder. So their idea is really to focus on making the use of EU taxonomy simpler. Nevertheless, looking at the platform's recommendations on minimum safeguards, we can observe three overarching principles: 4 reference topics, 2-pronged approach, and alignment by association. As you can see on the slides, human rights, including labor rights, bribery and corruption, taxation, and fair competition are the key reference topics. Regarding the 2-pronged approach, the first criterion is a positive assessment, which requires certain processes to be in place. The second criterion is a negative test, which requires certain impacts or events not to have occurred. For example, occurred conviction. Lastly, the platform seems to be suggesting that compliance with the Corporate Sustainability Reporting Directive, or CSRD, and Corporate Sustainable Due Diligence Directive, or CSDDD, guarantees compliance with the minimum safeguards requirements. Now I will move to social taxonomy that might also occur later and complement the climate and environmental taxonomy. It's intended to be a framework under which certain eligible economic activities can be considered as socially sustainable economic activities. Here again, the platform has a mandate to advise the European Commission on extending the taxonomy to social objectives while reflecting particularly on governance, anti-bribery, and tax matters. In February 2022, the platform in fact published its report on social taxonomy. And here again, this report is not binding by the European Commission, and the European Commission also announced that it's not looking to legislate on social taxonomy in its current term. So we can expect that no legislative act will be introduced before European elections, which are in May 2024. The only exception, of course, is the Environmental Delegated Act, as mentioned before. And now let's talk about the final point, and this is a possible review of the taxonomy framework as a whole. As part of the launch of both reports last Tuesday, the platform published also its assessment of how many companies which are currently in scope of the taxonomy already voluntarily reported on the taxonomy as of September this year. And interestingly, there are around 2,000 companies in scope, and 1,000 of them, around 1,000 of them, already disclose information about eligibility of their activities, and around 500 of those also reporting on their alignment. This indicates that even though we do not like all the parts of the EU taxonomy, it has really become very influential on the market, and its uptake is quite significant, and it's not yet fully in force. That's why if we look at the review and the potential review of the current taxonomy, we cannot expect anything to happen in a very short term. However, this review is foreseen for 2024, and there is a political appetite to fine-tune a little bit the EU taxonomy, but not to amend it substantially. EPRA will work very intensely towards that 2024 to develop a strong policy program, and I will guide you through certain steps which we will be taking in the coming 2 years, 2023 and 2024. So we will start, and we have already started, in fact, engaging with the European Commission on the review of the NACE classification system, and you will also hear here a lot more details from Raluca and Sandy in the coming moments. And we also engage with EPRA regarding the upcoming sustainability corporate reporting standard, and this is all regarding the specific needs for real estate sector. And our objective here is to highlight to policymakers that listed property companies develop and redevelop their buildings for our investment portfolio. We notice that this is the particular point that we need to indicate to policymakers and educate. In addition, we continue to raise the importance of renovations, explaining their climate mitigation potential, and advocating for their enhanced recognition within the European taxonomy. At the same time, we are looking at how to improve energy performance certificates, and we are very pleased that as part of the EPBD's review or energy performance of buildings directive review, the Commission proposed to build the new EPCs based on actual performance of the building. So this is a great improvement there. Regarding the proxies of other certification schemes to EPCs, we are also particularly pleased with the platform's recommendation to the Commission to enable the use of proxies, and that's in particular with the assets which are outside of Europe, so that you can include them in the accounting for taxonomy disclosure. And last but not least is the issue of comparability of the taxonomy disclosures that we will be looking into in a dedicated project to develop policy recommendations for more detailed taxonomy disclosure and tailored to the sector, and we will be seeking regulatory validations. This is what will keep us very busy in the coming 2 years, and I will close my session with referring to another 2 important webinars that are connected to the European taxonomy. So if you are interested, please do register. There are QR codes on the slide, so you can, that can direct you directly to the registration link. The CSRD's connection to the taxonomy is particularly within the scope, and SFDR's connection is particularly relevant to investors and its Article 9 products. With that, I thank you for your attention, and I will invite Sandy to take over the presentation together with Raluca. Thank you.
Thank you, Jana. Good morning. I am Sandy Zinman, and I'm an audit partner at KPMG France on the real estate sector. I would like to say 2 words before we present the guidelines. First is consistency. Consistency between financial and non-financial information. This is also the recommendation from ESMA, the European Market Authority. And second is relevance. Relevance between the main ESG objectives and the financial KPI. This is part of the expectation from the investors and banks on the green finance topics. EU taxonomy, as Jana explained, is one of the cornerstones of this trend. So Raluca is going to present the guidelines and the practical example.
Thank you very much, Sandy and Jana. Hello, everyone. First, I would like to take the opportunity to thank EPRA for allowing us to support them with the preparation of the EU taxonomy guidelines. My name is Raluca Carpangi. I am a managing director in the sustainability team of KPMG Luxembourg. And today I am pleased to walk you through a brief introduction of the EPRA taxonomy guidelines and a working example on eligibility and alignment reporting. If you have any questions, please place them in the chat box. We will address some of them at the end of the session. So we wanted to take the opportunity to highlight the overall project timeline, our initial objectives, and the evolution towards what you see today as current guidelines document, which was shared already with you. As you can see, we have come actually a long way. In April, we were contracted by EPRA to prepare an Excel tool to support you as members with the implementation of the EU Taxonomy alignment exercise. We also had in scope the preparation of workshops, and the first one was organized in May, where we have presented to a selection of members what was later actually defined as the working group. We have presented the taxonomy alignment tool for climate change mitigation and climate change adaptation, tool which is made available for all EPRA members as part of the current guidelines. We have taken into account the feedbacks actually received during this first workshop from the working group and addressed them during the second workshop, which basically summarized a market study on several large real estate entities and their disclosures in terms of eligibility process or reporting on KPIs, the three main ones, turnover, CapEx, and OpEx, as well as certain market practices, what we have observed linked to the EU taxonomy. Seeing again the feedbacks received after these two workshops and still the number of unanswered questions in the end on how to apply and implement EU taxonomy, EPRA decided to support its members and come up with the preparation of more detailed guidelines, basically what you see today. The result of a few intense weeks of work. We obviously would like to thank again the working group participants for their valuable input and questions addressed, which challenged the content and also emphasize basically where the practical issues lie. So thank you again to all your contributions. What we see as next steps for our work and for the current guidelines is for sure a FIQ document to address further your question asked today. We are also foreseeing a need to update the current document once the taxonomy itself evolves and once further guidelines or technical screening criteria are being released. And my colleagues announced me this morning that yesterday there was a document released on minimum safeguards, which obviously was not addressed, or our presentation was not updated with that particular part, and we foresee further adaptation on of the current document given those guidelines. I think we can move on to the next slide. Thank you. So I was mentioning the scope of the current guidelines document was for EPRA to support the members with the implementation of this challenging topic, the EU taxonomy. And while working on the preparation of the document, we have also decided we will only be able to address one of the sector eligible activities under the EU taxonomy. So we only focused on the activity 7.7, acquisition and ownership of buildings. The main target was to address questions of the working group, and these were also the questions that Hassan mentioned in the beginning. How do I report on the eligibility activities, on the alignment? How do I define top 15 or top 30 building stock? And also what methodology to use for reporting turnover, CapEx, OpEx percentages. And we will touch upon all of these later in our slides. We have also tried to address all of these questions as detailed as well as possible, given the current market practices and the current guidelines offered by the regulators. At the same time, the topic is very broad, the sector as well. Each of you has basically its own particularities, and for this reason, we have also tried to remain as generic as possible in our explanations. So we can already tell you that we were not able to answer all your questions, right? Obviously, we are not presenting the rule of thumb, and we are merely trying to guide you through, on one hand, the steps you need to undertake for the implementation of eligibility and alignment, focused on the activity 7.7 in the context of the two EU taxonomy objectives for which technical screening criteria was released, basically climate change mitigation and climate change adaptation. And on the other hand, to also detail for you the definition of the three main KPIs. Together with EPRA, we also believe that the practical example is easier to follow and to further replicate. So today we will go through that together. And last but not least, we have gathered some market practices on the top building stock interpretation from Sweden, France, and Germany. And indeed, this topic we have also discussed to further gather information on additional countries and their respective market practices. So we know that some of you have asked for this information for the UK, for example. However, in the current document, we have not addressed UK just yet. We can move on to the next slide. And maybe before deep diving into the guidelines of the EU taxonomy definition and steps, you might also be thinking, why you, right? Why the real estate sector is so important to the regulators, scrutinized and so on. And the reality is that, according to market estimates, the real estate sector is responsible for 40% of energy consumption and for 36% of greenhouse gas emissions in the EU, due to construction, usage, renovation, and demolition. Therefore, real estate companies' continued transformation and continuous effort to have sustainable activities will be a key support in achieving the carbon neutrality targets set. Given the importance of the sustainability integration of this sector, the European Commission developed a set of delegated acts on how to actually perform the analysis and how to report the information, which is also part of our guidelines. Last but not least, there are reporting obligations under the Delegated Act of Article 8 of the Taxonomy. So the EU taxonomy serves as a backbone, as Jana mentioned, as well as Sandy, to the EU Sustainable Action Plan by providing a common language on which economic activities can be considered as environmental sustainable. The regulation sets out four main criteria which need to be met in order for an eligible economic activity to be considered as an environmental sustainable economic activity. And these criteria are applied as a second step after the eligibility of the economic activity is being addressed as a step one, which is what we have detailed actually on the slide. So the first step is to analyze whether the economic activity is part of the scope of the technical screening criteria. And currently there are 7 economic activities which go from 7.1 to 7.7, defined as either standalone, transitional, or enabling. And you will find the description of these activities and definitions in the guidelines. And I have only extracted a snapshot of that particular page on the right side for you today. The economic activities are defined and are linked to relevant NASE sectors. And the mapping between the NASE codes and the eligible activities is not a one-to-one system, but one economic activity may be associated with several NASE codes. As you can also briefly see from the second snapshot from the guidelines that we have tried to prepare for you. It is also highly important to understand the definition of the activity behind the NASE code to basically ensure the proper interpretation of the activity as being eligible. So having the NASE code will not suffice. So just by taking the NASE codes and allocating it to the economic activity, as I was saying, will not suffice. And you really need to challenge what is behind this NASE number. We can also speak from practice, from an advisor perspective, and we can tell you it is not a walk in the park exercise and can be identified as a first project within a larger alignment project to basically prepare the mapping of eligible activities and integrate it into your accounting system. Obviously, not all activities that companies may perform are eligible, and therefore, if the activity is not defined in the technical screening criteria, it is basically not eligible under the EU taxonomy, and it cannot be considered as environmentally sustainable. Having said that, we can move to step 2 on the second page, on the following page. Thank you. And this step 2 is the alignment assessment, very high level on this slide, of the eligible economic activity, which is being documented by ensuring that first, the economic activity makes a substantial contribution to one of the environmental objectives. And I will maybe use shortcuts for climate change mitigation as CCM and climate change adaptation as CCA going forward. And you need to demonstrate basically the substantial contribution by following the technical screening criteria. We will go through the technical screening criteria steps in the next slide for CCM for the activity 7.7. Second step, the economic activity needs to ensure that while contributing to one objective, the activity does not significantly harm basically the other 5 objectives according to the checks set out in the technical screening criteria. And we will also detail the do not significant harm exercise for CCM in the next slides. Finally, last but not least, the activity needs to comply with minimum social safeguards to qualify as environmentally sustainable. All checks needs to be met to consider the alignment of the activity. And please note the substantial contribution and do not significant harm checks are specific to the activity and the objective, while minimum safeguards are always the same, regardless of the economic activity or the objective. So in practice, if I were to add this point, we also see that companies start with this exercise first. They consider it easier, but we will detail it further. We can jump to the next slide. And we start getting a bit more into the details. And for today, we have chosen to go through the technical screening criteria, substantial contribution for CCM. And in the guidelines, you will find a similar exercise for CCA. Please note, technical screening criteria check is different from one activity to another. And this adds a layer of complexity in scaling up the exercise, basically, when a company's business model has many different types of economic activities. We know that. In that case of CCM, the technical screening criteria reflects the need to avoid producing greenhouse gas emissions, to reduce such emissions, or to increase greenhouse gas removals and long-term carbon storage. And with this purpose, the technical screening criteria define specific thresholds or performance levels that the economic activity should in fact achieve in order to qualify as contributing substantially to CCM. So if we follow the example, the first question to ask is, was your building built before 31st December 2020? And I will choose to follow the line with a yes, and to go to the next question, does your building have an EPC Class A? To make it more interesting, I will follow the no question, the no answer. And this leads me to further questions. Is your building within the top 15 of the national or regional building stock in terms of PED? Is this adequately demonstrated that the building is actually in this top 15? Does it at least compare the performance of the assets to the one built before 31st December 2020 and distinguish between residential and non-residential? To make it again interesting, I will choose maybe the answer no, and then we have two options. If it goes to no, then the activity is not aligned. Then if I follow an additional question, is the PED at least 10% lower than the threshold set out for net zero buildings? Is the energy performance certified using EPC? And if the answer is yes, then we can follow the greener part, which would actually lead to the next question: did the building undergo testing for airtightness? And everything that, and all the other details that are required under this question. You can basically see that if you have many answers as no, the activity is not aligned, and unfortunately you will not be able to report your activity as being aligned. But if we go and say, actually, yes, my building did undergo testing for airtightness, and this takes us to the next question: has the life cycle GWP from construction been calculated for each stage and discloses to investors' clients on demand? If the answer is no, again, the activity cannot be considered as aligned. If the answer is yes, it takes you to an additional question: is your building large and non-residential? Answer no, it goes directly to technical screening criteria check being positive. And if the answer is yes, it adds an additional layer, an additional question: is efficiently operated through energy performance monitoring and assessment? And, you know, it would be sad that you have answered positively to all questions until now, and to have no as an answer here, which again, the activity would be considered as not aligned. And then yes, it means that the activity complies with substantial contribution for the technical screening criteria. The alignment assessment can proceed to the next check, which is the do not significant harm check. Obviously, on this slide, we have followed the graph, and it seems even by following it, maybe not that easy. In practice, you will need to document all your answers to these questions. I think few points are important to highlight under this technical screening criteria check for substantial contribution. And the first one is that the reality is that there is limited market practice when it comes to this definition of 15% of building stock. And there are certain countries where local studies are being accepted by the market as benchmark or as reference, at least until other studies are published or more guidance is provided by the regulatory authorities. And I give as an example France, where we provided you with information, and that information and this example actually has not been endorsed by the French auditor organization or by the French Treasury. So any such approach that you would like basically to follow should be confirmed with your external auditors in advance. The second main issue is that there are two possible definitions of building built before, right? We had our starting question, was your building built before 31st December 2020? Either the building permit release or the building completion notice can be considered in this case. And the technical screening criteria doesn't specify this definition yet, and two most common options are possible to consider, and you can also say both are relevant at the time of the acquisition, which creates even more questions at the moment of the contract is signed or at the moment the ownership actually is transferred. So only with this first question we have so many additional uncertainties and clarity that we require and that you also require. There are also open questions left, such as how to define and document the PED as being 10% lower than the threshold for net nearly zero energy buildings. And I saw that one of your questions in the chat box was linked to that. We do not have yet all answers. And last but not least, how to actually and in practice apply this process that you see here, this page, for a large number of assets or units. And this in practice would take a lot of time. We can move now to the next slide. And in the context of the CCM objective, the CCM objective for the activity 7.7, climate change mitigation, the only do not significant harm check to be performed is related to CCA, climate change adaptation. And for this check, the economic activity needs to comply with the criteria set out in Appendix A of the EU Taxonomy Climate Delegated Regulation. It is a non-exhaustive list of the climate-related hazards, which represents an indicative list of most common climate hazards that should be considered as a minimum in the assessment of climate risks and vulnerability of the building. Now, adaptation solutions need to be addressed for climate hazards, which have been identified as material. You have on the right side a snapshot of the classification of climate-related hazards. Therefore, the following steps should be followed to complete the do not significant harm check. First, perform a vulnerability assessment of the building to verify which of the climate hazards are material, referring to high probability of occurrence of the climate phenomenon. This shall be done through expert knowledge, urban planning, regulatory risk prevention plans, or exposure assessments. For the climate hazards that are considered material, analyze the relevant adaptation solutions which have been implemented at a building level in order to lower the vulnerability of the building towards the occurrence that material climate hazards. Please see a snapshot of few examples of adaptation solutions, physical and non-physical. And I mentioned for the non-physical, the fire response protocol and site evacuation plan. And thank you to the working group for pointing this out to us. Please note that the do not significant harm principle is applicable at the level of the economic activity, but the criteria is actually often linked to the underlying real estate asset behind the economic activity. And that the do not significant harm checks are not the same for all activities, similar to the case of the sustainability substantial contribution. Although the do not significant harm criteria applies to the economic activity as per the taxonomy, the link to the underlying real estate is inevitably to be considered at the end of the day. And even though it is not the case for CCM and Activity 7.7, some of the do not significant harm checks criteria of other objectives or economic activities refer to the building's EPC rating or water usage standards. Having said that, I think we can go to the next slide. Thank you, which is the last step of the alignment, the minimum safeguards check. So finally, in order to align with the economic activity, to align an economic activity with the EU taxonomy, the activity should be carried out in compliance with minimum safeguards as indicated by Article 18 of the EU taxonomy. The minimum safeguards refer to the requirements, principles, and guidelines that are set either within the OECD guidelines for multinational companies, enterprises, or the UN guiding principles, including the principles and the rights defined in the 8 fundamental conventions identified in the Declaration of the International Labour Organization on Fundamental Principles and Rights at Work and the International Bill of Human Rights. So the first guidelines include non-binding principles and standards for business with a responsible conduct, and considering a global context consistent with applicable laws and international recognized standards. The second guideline contains a framework for companies to report on with respect to human rights. It is likely that further diligence would be required for the minimum safeguards check, covering the topics of corruption, taxation, and fair compensation. And it would also be curious to see the recent released guidelines. On the right side, we have provided a snapshot from the guidelines on the OECD recommendations to follow. From our experience, the minimum safeguards check is another type of project within a project. And given that it does not really depend on the economic activity, as I was saying before, some actors are addressing this as a first point, actually. And currently the minimum safeguards requirements are always the same, independently from the economic activities or the environmental sustainable objectives that the company tends to pursue. So from a exercise standpoint, you do it once, and then at least you know you are covered for your full company. We would like to add on this part a note on the fact that even though minimum safeguards apply to the economic activity, the practical application is mostly carried out at entity level. And in the guidelines, you will have a similar exercise for CCA, even if some parts are the same, such as minimum safeguards. For completeness purposes, we have maintained all steps that you have seen here for CCM. We have maintained the same for the CCA in the guidelines for activity 7.7. I think we can move on to the next slide, which is slide 26 in my notes here. And so far, we have not discussed of whether you are or not in the scope. So please do not log off if you realize you are out of scope now. So to make a parallel, we actually see in practice a lot of our clients who are out of scope, or their assets are out of scope, who would like to have a EU taxonomy gap analysis before the mark-to-market exercise. So it is definitely relevant for the sector. As of today, public interest companies with more than 500 employees will need to disclose first taxonomy eligibility from 1st of January 2022 and taxonomy alignment from 1st of January 2023. As of 1st of January 2025, and this is for the year 2024, the scope is extended to companies that meet at least 2 out of the 3 criteria that you see here on this page, having more than 250 employees, their turnover being 40 million, and their balance sheet exceeding 20 million. Additionally, SMEs matching certain criteria will be included in the scope as of 1st of January 2026. So we basically see that for real estate companies, meeting the turnover and the balance sheet criteria could be something immediate and affect a lot of market players. As we finalized to work the documentation, as we finalized to document basically the eligibility and alignment, and now we need to report on the proportion of green activities which are measured against turnover, CapEx and OpEx. Given that the reporting needed to be standardized and comparable across companies, the regulation defined both the template and process of calculation, which we will see in the next pages. And I think we can jump to the next page, which is the working example. So the following section aims at presenting you with a proposed example of how a company should proceed to either define its economic activities that are EU taxonomy eligible or aligned, and how to report on the 3 KPIs. And we will use, as an example, a company which is buying real estate and exercising ownership of that real estate. We will firstly provide a view on the steps to define the eligibility of the assets under the EU taxonomy, and we will perform the steps to define if they are compliant with technical screening criteria for substantial contribution, do not significant harm for both CCA and CCM, including minimum safeguards. And finally, we will provide an example of reporting and filling templates related to the activity eligibility and alignment. So on this slide, if we are to jump directly into the example, the first question is, are my economic activities eligible? And to understand if my economic activities are eligible, I need to check if they appear in the technical screening criteria. The first one is buying real estate and exercising ownership of that real estate. And this I can easily find it as an eligible activity 7.7. So it's a check, the economic activity is eligible to make a substantial contribution to climate change. The second one, though, planting, maintenance, and so on, in 81.3, this activity, I cannot really find it in the technical screening criteria, nor any similar description to match it. So this economic activity is not, in fact, in the scope, is not eligible under the EU taxonomy. We have a note here as well, not to forget, NACE codes can be used as a reference, but it is not necessary to check the description of the activity. And I think we can move on to the second step. Next slide. Thank you. How do I report my eligible activities? And the proportion of turnover, CapEx, and OpEx that is linked to the eligible activities will determine the percentage of eligibility as a company. In this particular case, I will need to identify the proportion of turnover, CapEx, and OpEx, which is linked to my eligible activity, which is buying real estate and exercising ownership of that real estate, as we have seen in the first one. Now, let's say we finalized the eligibility and we go into the alignment process. For this step, we will focus on only, obviously, the eligible activity, right? The activity which is not eligible is already out of scope. We will not mention or look at it any longer. And for this, the purpose of this exercise, we took an entity, a company that had 6 buildings from A to F, and we can go to the next slide. And in terms of process overview for the alignment, we will first check the followings for each building. Does the building meet the criteria for climate change mitigation? If it's a yes, straightforward. If it's a no, there is an additional question. Does it actually meet the check for CCA? If it's a yes, that's very good. I can consider it further. If not, it will be out of scope. So we move to the part on the right, where we ask ourselves, do the buildings meet the criteria for substantial contribution to CCM? And to do this, we need to check, obviously, the technical screening criteria. First, the substantial contribution check. The company checks when the buildings were built, and all 6 buildings were built before 31st December 2020. Therefore, it consequently verifies the EPC class of the 6 buildings. For A and B, the 2 buildings are non-residential in our case and own EPC class A. They comply with substantial contribution check, and we can proceed to the next one. For buildings C and D, these buildings own an EPC class C and are not within 15% of the national building stock. in terms of PED. So we consider them not aligned as yet. Buildings E and F own an EPC Class D and are not within the 15% top of national or regional building stock in terms of PED. And also these are not aligned. So they do not comply, these 4 buildings, with the substantial contribution check for CCM. However, we can check if these comply with CCA. So we move on to the next slide. When we move on to the next slide, do the buildings meet the criteria for substantial contribution to CCA? Consequently, the company checks whether the buildings substantially contribute to the CCA goal, as they are not able to meet the criteria for CCM, as we have seen before, which is in fact more restrictive. So in order to verify the compliance with technical screening criteria, the company performs a vulnerability assessment of the buildings against the climate hazards and discovers that most material hazards material hazard is linked to the rise of sea level, and therefore it analyzes whether adaptation measures were put in place at building level. For building E and D, the 2 buildings put in place adequate solutions, adaptation solutions, and complies with all the technical screening criteria for substantial contribution. They comply with substantial contribution, so we can proceed to the next steps. So therefore we put a green check. Now for buildings E and F, they do not have adaptation solutions in place to tackle material hazards, so they are not aligned. However, for building F, we have a CapEx plan to put in place the necessary adaptation solutions, but it is not in place yet. And by not in place yet, we mean that from, let's say, an accounting perspective, it has not started yet, right? It is not yet deployed. So in the orange box, we drag your attention towards the fact that it is possible for buildings to qualify under CCM and CCA objectives. However, they will only be counted once for the financial KPIs, right? So even if they are eligible either on one objective or the other, obviously they will only count once, right? If we go to the next step, which is, do the buildings meet the criteria for the do not significant harm? And here we will check them by groups, and only the 2 groups will actually be addressed in this part. For assets making a substantial check to CCM, the do not significant harm is performed for CCA and vice versa. So for assets A and B, we need to check for alignment with CCM, substantial contribution to CCM, and do not significant harm check linked to CCA. And we see that the 2 buildings have put in place adequate adaptation solutions to tackle the climate hazards that resulted to be material from the vulnerability assessment performed by the company. They comply with do not significant harm check, so they can proceed with minimum safeguards. We also draw your attention for the activity 7.7. The only do not significant harm defined when you make a substantial contribution to CCM is actually linked to CCA. So there are no additional do not significant harm checks linked to either to other environmental objectives. And we can move on to the next step, which is checking the do not significant harm. The next slide. Thank you. The do not significant harm checks for assets C and D. And here we see that the two buildings are not dedicated to extraction, storage, transport, or manufacture of fossil fuels, and they have an EPC class C. So the assets comply with the do not significant harm check. They can actually proceed towards the minimum safeguards. So if we are to conclude for A, B, C, and D, for the activity 7.7, the company is aligned with the minimum safeguards as defined in prior steps. The economic activity 7.7 linked to these assets is EU taxonomy aligned, as the company respects business ethics, human rights, and required guidelines. So from minimum safeguards perspective, we also consider it as a check. We note that minimum safeguards need to be checked per economic activity, but apply at entity level, and this exercise is easily scalable under the same company. Now, what is my final taxonomy alignment? And here we see again all the 6 buildings, and we see that the first 2 are CCM aligned. Number 3 and 4 are CCA aligned. So we conclude they are taxonomy aligned. However, E and F are not yet aligned. But we keep in mind that for F, we have a CapEx plan for this building to become aligned. So we can move on to the next page. Thank you. To actually start calculating the KPIs. And for this example, you can see that we have considered for each building turnover, CapEx, and OpEx. I want to make a reference to the fact that this entity had 2 economic activities, out of which one was not eligible under the EU taxonomy. So when you see this net turnover, we only refer to the eligible turnover. So this is an observation. We conclude that none of the metrics related to building E are eligible, in fact, for the reporting on the EU taxonomy. And we draw your attention for the CapEx and the OpEx plan that can be counted as taxonomy aligned. There is still regulatory uncertainty around the disclosure and accounting principles that shall be applied when the plan covers multiple years. Nonetheless, a common market practice can be observed, which is only counting the realized CapEx and OpEx, while a narrative explanatory note is added to actually disclose additional planned CapEx or OpEx for the coming years. This is also done in the objective of reconciling with accounting systems and avoid any discrepancies between the two. At the same time, shareholders and future investors will be aware of the full CapEx plan for the coming years. However, for the purpose of the calculation, you will only use what you have already in your accounting system. And we can move on to the next slides. Obviously, I will not go into the details of what goes into each KPI. I think this is self-explanatory. For the purpose of the guidelines, we have also tried to map for you for each KPI the relevant financial standard. We hope it will be of use. So once I know my alignment, how I can report, again here the methodologies that are used, and I will not choose to go into the details, maybe only to say that for the purpose of this exercise, we know there is a CapEx plan. However, and this could be added. However, in our particular example, the CapEx was not started yet, so therefore we have not added anything under the middle point, this CapEx plan to expand on, which is and can be considered as taxonomy aligned. And obviously, if the CapEx plan expands on several years, you will only report what is in your current financial year to avoid any sort of double counting. We move on to the next slide, which is basically the reflection of the pure disclosure covering the year for this specific non-financial undertaking, and we take the respective percentages following the above calculations. And yes, this disclosure needs to follow specific templates set out in the Taxonomy Article 8 Delegated Acts. We have taken here only the example for the KPI calculation. Obviously, you will need a similar table for each of them, each KPI for turnover, CapEx, and OpEx. I think we can move on maybe to the next slide, also conscious of time. And the next and final slide from our side, we wanted basically to provide you some market examples on the interpretation of the top 15 benchmark. So in Sweden, we see that Swedish Trade Association makes, in fact, a benchmark of the top 15 of buildings in terms of energy efficiency. And their approach takes into account the purpose of the building while measuring the kilowatt per square meter per year in accordance to the building life cycle. We offer obviously more details in the guidelines. We looked then at Germany, where we saw that German association, together with the consulting firm Dresden Sommer, have created a benchmark for assessing taxonomy alignment. In addition to that, the German Association on Sustainable Building created in 2009 a certificate for sustainability. And it seems that the certification is used today most frequently in the German real estate market and also accredited worldwide. More details in the guidelines, and also I think we have put the links of the public information where this came from. We also looked at France, where we saw that the Observatoire d'Immobilier Durable has established a reference database for the French market through the Energy Performance Barometer, and is therefore able to provide the EU taxonomy thresholds for France. At the same time, the National Observatory for Energy Renovation classified all buildings that belong to EPC A, B, and part of C as constituting the top 15 buildings. Again, more details on this part in the guidelines. What I would like maybe to remind, linked to these market practices, is the fact that When it comes to the definition of the top building stock, the OID study is starting to be used as reference in France, right? And at least until there are further studies published or more guidance provided by the regulatory authorities, it seems that the market is using this. Now, please note that this has not been endorsed by the French auditor. It's something I mentioned earlier as well. And to emphasize that French auditor organization nor the French Treasury. And that the approach, whatever you decide upon, needs to be discussed and confirmed with your external auditors in advance. Similarly to France, the German Association on Sustainable Buildings has become the market reference to determine this top building stock until further clarification or guidance is even provided by the regulators, right? Either European or local. So any such practices, again, should be confirmed with your external auditor or local regulators. Having said that, I believe it is now time for the Q&A. And maybe before going into that, I would like to thank again to all participants to the webinar, and please do not hesitate to contact either EPRA or us to discuss in more details any of the aspects of the taxonomy and its applications. We would obviously be excited to be provided with the opportunity to exchange directly and to see even more challenges that you are confronting yourselves with. So going to the questions, the opened ones. I am just looking now, sorry for that. So we will address one of the questions directly, which is as follows. Can you please confirm if there is a preferred KPI for each economic activity? For example, turnover for acquisition and ownership, CapEx for renovations, or those three apply to all economic activities? And as an answer, we say that generally turnover is considered to be the primary KPI for taxonomy aligned. However, CapEx and OpEx are also useful indicators for expenditure trends and strategy of the company. And this may, of course, also depend on the extract economic activity which is being discussed. I see Yana and Hassan jumping. I can also address another question if we have time. Yeah. Which is question number 5. We haven't addressed new construction or renovation. Will be this covered at some point? Indeed, for the sake of time and size of the guidelines, we have only focused on acquisition and ownership only. And the idea here is to give an overview of the logic that needs to be applied behind when assessing the alignment process of a real estate economic activity. But this we will need to see further with the EPRA team, if and how we can address everything else. But we do realize the complexity and that each and every one of you is a special case. And this we will not be able to treat, unfortunately, in a guidelines document. Iana and Hassan.
We still have time to answer a few more questions. Maybe I can have one particular questions or set of questions that we received regarding the scope of the taxonomy. So I just want to mention that the scope of the taxonomy is connected with the scope of the Corporate Sustainability Reporting Directive, CSRD, and we will have a dedicated webinar on 27th of October, where we will be discussing in more details also this requirement and the scope of the CSRD and the EU taxonomy. And at the same time, we will be launching scope assessment tool for CSRD, which may be helpful for this exercise. So if you're interested, please do register to that webinar. It seems that it's going to be useful. Back to Raluca for some more questions.
Thank you. I saw a question on whether we will, if in addition to Sweden, Germany and France, we will make available more practical examples, and the intent together with EPRA is that to further develop the current document and to add probably some other guidelines. We will need to see together how to do that, how many countries, and so on. But indeed, the idea of the guidelines is to have a live work in progress, or to say, type of document, and come back to you with more information. Where are the EPRA taxonomy guidelines available on the website? Maybe here the EPRA team can answer to that. I saw a lot of questions linked to the EPC, and this is a topic we will need to further look into. We do not have all answers yet. I may address now question 3, which is the adaptation solutions are supposed to be nature-based. However, the list shows different solutions which are not nature-based and can be considered to have an adverse effect on the environment. And I saw that this question was actually addressed by other people. So indeed, the adaptation solutions are nature-based, as they address climate hazards. And after discussing with the EPRA members, we noticed that there are many different types of adaptations, in fact, the adaptation solutions to address these risks. And it depends on the risk. Non-physical adaptation may be accepted as well, such as the one we gave before and that you have in the guidelines, being protocols or policies to prevent or minimize impacts to those physical risks. And the final guidelines will have a more detailed overview of this. So we can also kindly ask you to go to the guideline document. I will try to see other questions. For top 15 in Sweden, I think we have some thresholds in the guideline document. So please have a look at what we have disclosed there. And obviously, if you are missing more information, let us know, and we will see what we can do on that. Okay, trying to scroll through the questions.
Maybe in the meantime, Raluca, I could mention that the anticipated update of the guidelines will not happen before the environmental taxonomy is completed legislatively. So we would also add the information on the extension of the environmental taxonomy. It's possible that it will be around Q2 or Q3 next year, but it is yet to be confirmed. So we'll leave it open for now.
Indeed, thank you, Jana. Then there was question 2 in the chat box. Can the TCFD compliance be sufficient for the vulnerability assessment? And here, indeed, some parallels between the two may be drawn, as requirements of TCFD require a vulnerability and risk assessment, as is the case for the taxonomy. At the same time, please note that a comprehensive review would need to be done on this to make sure we are indeed addressing all material risks as per the taxonomy. So it can help, but you need to ensure that it actually covers everything.
Perhaps I can just jump in on some other queries covering the presentation today. So the recording will be available on EPRA's website. We will circulate the presentation to all attendees. As mentioned by Jana and Raluca, we will be looking at updating the guidelines next year. So all the questions that we're getting, we will be taking that into consideration, but also further clarification from the European Commission and or a market practice. We will obviously try to address as many questions as we can in the next 4 minutes or so. If we haven't responded to your questions, rest assured, Zoom allows us to access those questions, and we will try to get back to you individually.
And maybe before closing, Hassan, thank you. We will address one last one. Question number 1 on acquisition and ownership. Do we need to provide all 5 do not significant harm safeguards, or do we only need to provide 1 if we have significant contribution of climate mitigation? The participant, I have heard that law requires only top 2, but investors want all 6 to be covered. And our answer is that in the regulation, it is required that the criteria of all other 5 objectives to be considered, in fact. And as mentioned in the example, obviously for acquisition and ownership, only has do not significant criteria for climate change adaptation. So only this criteria needs to be met. But for everything else, you would need to cover all of them. Thank you again. I think we are almost done, and all other questions will be addressed in an FAQ document. I leave the floor to you, Hassan and Jana. Thank you again.
Great. No, thank you. Just to reiterate, we have received a lot of questions, actually. So we'll be responding to those as part of the FAQ document, but we'll also try to reach out to everyone who's asked a question individually. Just allow us a couple of days to get back to you on those queries. I would just like to thank Raluca and Sandy and the rest of the KPMG team on behalf of EPRA for all the help and support they provided in producing the guidelines, but also this webinar. As mentioned a few times during the webinar, these guidelines are a live document, so we do plan to update them next year, and we obviously rely on the input of EPRA's membership for helping us to do that. But lastly, thank you to all attendees. We've had a record turnout for this webinar. We hope you found the webinar and the accompanying guidelines of value. As always, EPRA is here to help and support the listed real estate sector. Please do get in touch if you have any questions or queries. And with that, I would like to thank everyone and close the webinar.